All right, gang. Good to see everybody. Audio and video should be good. Happy Monday. Happy Valentine's Day. We have some Bullard volatility to kick off the morning. And we know what we're dealing with here. We're dealing with a lot of FOMC chatter as the FOMC prepares the market for what is expected to be either a rate hike. Here we go. Let's go over to the target rate probabilities. Which is actually a growing expectation. Once this column here, the 50 to 75, crosses the 80 threshold, we're in half point is discounted rate hike land. So you can see that continues to climb. And every FOMC event like Bullard today is going to be overall something we need to keep an eye on. So as always, this show is about your questions. So, there's not much to talk about when it comes to macro trends because monetary policy eclipses everything. There's not much to talk really about in terms of the overall trends of these markets. We know, and I've been talking about this in the free videos, and we have setups, live open setups, short IWM or Russell, short QQQ. I'll be in the options room immediately after Charts and Coffee. We'll talk about the second target in the Qs that we're looking at. So T2, we're going to be moving to a trailing stop and continue to manage that open trade. So let's dive into the questions, kicking it off with, hey there, Peter. When I day trade futures, for example, the NQ, sure, do I put a stop loss after the entry? I do not. I do not use typically physical stops in the market, especially when I'm day trading. I know what they are. So I think a lot of folks confuse, hey, no physical stops, trailing stops are physical stops, targets are physical stops, but I have what's known as a mental stop. Now, why do I say that? Especially day trading the first 30 minutes of the day, the first couple hours of the day, we're still dealing with the volume expansion, the volatility expansion of the morning. So when I'm caught up in that volatility expansion, I typically don't want my order sitting out there to get picked off by what is that, especially from 9:30 to 10, what is that volatility event? Oh, a lot of folks have been asking about the puppy. I don't know if y'all can see the puppy. Yeah, there she is. I get a lot of questions about the pup. There she is. Hanging out with us for Charts and Coffee today. All right. So yeah, I typically don't like to leave a physical stop. But by the way, since I have the luxury of, basically being at my desk, I don't mind to do that. Now, how do I decide the number of points for the stop loss? Peter, you can see this graph on the screen. This graph coincides with a tool that I created many moons ago called HPMRs. I am the world's worst indicator namer, but I spend a lot of time creating my indicators, not as much time naming them. And this is what allows me to understand what the range and volatility is like, the hourly price movement range. And so it's going to be a combination of that, these numbers, and the opening range. So that's usually where I'm going to be understanding what kind of risk I'm going to have to take on. Okay. I'm going to have to accept, and this is risk we have to accept before we take the trade, right? There's no way we want to enter a trade without having quantified the point of validity, as I like to call it, for each and every trade. All right. Next up, Jody, good morning. When the futures move dramatically, right, Bullard, what tool do I use to understand why, or do I not worry about the why? Jody, it's always kind of an interesting juxtaposition of, do I care what the why is? I do. The easiest way to determine it is by knowing what the hot zones are for any day. Back in 2006, I believe that would have been my second book. I think it was my second book. I talked about what a hot zone is. It's a scheduled high impact volatility event. But the most important thing is it's scheduled, because we cannot prepare for something that is unscheduled, right? We always have to prepare. We can only prepare for things that are scheduled. So I always want to start with the economic calendar. So if I know what's on the calendar, Bullard, or if I know that there's typically a volatility expansion at a certain time, that's going to help. After that, I will look at different news feeds, or even I have a fairly curated list of follows on TweetDeck, which really is quite effective in terms of understanding news. I will usually have CNBC on muted, just so I know if there's a guest hedgy FOMC member. So I'll monitor it that way. But the first impulse is not the why. The first impulse is what time and how much. And then I'll start to deal with what it was that might have triggered it. So great question, Jody. That's how I usually handle it. All right, moving on. Hey there, James. How are you? A few areas I'm keeping an eye on: EWU and EWZ. So I love that UK. Yeah, absolutely. I'm with you on that UK narrative. I think that, look, the UK is an interesting corner of the market right now, because this is, by the way, the MSCI shares for the UK. And you could really consider it tracking the FTSE in many ways. And so this one is interesting because the only other central bank that is really as hawkish, or kind of jumped ahead of the line in terms of tightening cycles, is the Bank of England. And then we've got EWZ, that's Brazil. Now, why would Brazil benefit in this environment? Brazil is very much an exporter of commodities. We have an inflation narrative right now. And with that inflation narrative, we know that beans, corn, cocoa, sugar, of course, crude, there are these good old-fashioned grocery store commodities that have been moving higher. So EWZ, Brazil, would be a fantastic corner of the market that would move with the macroeconomic trend of the rising inflation, right? And then finally, JETS. In this week's watch list, it's my turn this week to do the weekly watch list. So I've got some notes rocking there. And JETS is interesting because it's trying to get above the 200. It has not successfully done it yet. I would still consider JETS largely to be a distribution choppy environment, but it doesn't mean that we can't dive in and look at some of the relative outperformers. So we have kind of an ugly 1, 2, 3. I wouldn't even call it a 1, 2, 3 reversal. And by the way, for those of you that are not familiar with, Rog, what the heck's a 1, 2, 3? If you head on over to Countdown Trader, in fact, what I would tell you to do is Google Countdown Trader 1, 2, 3, and you'll see the write-up that Trish did on this pattern that I've been trading since I was a teenager. The Dow 1, 2, 3 reversal, and there's also a Dow 1, 2, 3 continuation. So check that out. It gives you all the deets on what the pattern is, what it's designed to do, what environment you want to find it in, and some of the things that I found that make some 1, 2, 3s better than other 1, 2, 3s. So with that being said, I would be very careful calling that one a 1, 2, 3. What I would really be interested in, James, and it's definitely something that I've been putting in the my trading journal, is what are the outperformers? What are the outperformers in JETS? Do we have anything in terms of individual stocks within JETS that looks like it could be sort of getting better bullish structure before the broader, in this case, ETF does? So great question, James. All right, next up is, let's see, Air Conditioned Gypsy. Curious question. Indices trading overnight tend to return to the previous day close price more often than not by the cash open here. Any idea why that is? It has a lot to do with volume. It has a lot to do with liquidity. It has a lot to do with likely gaps. And at the end of the day, they're support and resistance, but some support and resistance has a certain magnetism, has a certain gravitational pull. So while I don't assume that's going to happen, we want to keep in mind what? And great observation. We want to keep in mind not that something is going to happen. We don't want to get predictive in the way that we look at the market. We want to be more counterpunchers. We want to be the batter, right? I got that bat on my bookshelf there. We want to be batters. It reminds me that it's not my job to predict necessarily what the pitcher is going to throw at me. It's my job to recognize the pitch and know if it is one that is appropriate for me. So with that being said, just know that it's a pitch that could be one depending upon the structure that you could buy or short. So good stuff. Good stuff. All right. Next up is, let's scroll on down. Hey there, Marcelo. Diz, sure. Question is Diz ready to short? Look, I like the fade on the gap higher on earnings of Diz. It wasn't quite as beautiful as the setup on Google. The way Google gapped on that news about the split and the earnings. But it's the same idea. Does a choppy market end up at the overbought end of the distribution range? And can I short that up there after the earnings? So I like the short. It's no longer a trend. It was for a very brief period of time. But, Diz lines up with the overall bearishness that we have on XLC, which is a setup that we discussed on the heels of Google as a proxy for Google, a more inexpensive way to enter that trade. And XLC has been much clearly defined by the bearishness once it dove beneath the equator. The equator is what? The 200 propulsion, the 200 EMA. So it's been in the bearish hemisphere for some time, and that makes for much more confident shorts. All right. So it ties along with that XLC very, very well. Boats and tides, my friend. Love it. Happy Valentine's Day, Mark. What are my thoughts on GLD? Well, let's jump into GC, right? Gold futures. And, I've said for some time, I don't want to be short gold, not in this environment of likely real yields continuing to move lower, not by a lot. Real yields are the nominal yield of a bond minus the rate of inflation, and they move inversely to gold. Gold is now actually at an overbought level. We've got a volume ledge up in this area. We've got take a look. We've got some previous highs up in this area. So I'm not a huge fan of, that's my attempt at drawing a circle. Gosh, that was a futile attempt. Let's draw a little square. Here we go. So I've got this resistance area up in here, right? That's something we want to keep an eye on. This would be likely an overbought resistance zone in GC. Look, I'd love to buy gold, whether it be GLD, which looks just like GC, right? I'd love to buy gold, whether that be micro, gold futures, full-size gold contract, GLD. And by the way, once we start getting a little bit more clarity on GLD, GDX and XME start to get clarity too. So what I would want to do here is just wait for a retracement, last major move, minor low pattern to minor high. And, if I can get a 382 level, you can see us syncing up pretty nicely with that Darvis support right there. If I can get a pullback into this area here, I'd be right as rain about that. So I want a little bit of a pullback, and then I'll look to engage gold north of the equator. Not quite an uptrend in terms of bullish momentum and bullish trend, but it sure is working on it. So I do like the long. I just need a little bit of weakness to jump in. All right. Okay. So next up is, hey there, Ron. I am interested in, you're interested in my mastery, but in most of my accounts, I cannot do spreads. How much of a drawback would that be for me? Ron, zero drawdown. I buy calls. I buy puts. That is 99.99999 of what I do. I don't do spreads very often at all. Not that there's anything wrong with it, but what I consciously did with the mastery. Look, there's a lot of traders here at Simpler that are awesome at spreads, right? If I want to know how to build a butterfly, I ask Henry, right? If there's something that I want to do with a put credit spread, I'll watch John. But what I do, what I bring to the table is the timing and the directional bias of getting long calls, getting long puts, focusing on doing all that in a cash account. So I don't even use a margin account for the account that I trade my options in, especially the one that mirrors what I do in the sector secrets. So drawback, zilch, zilch. If I knew how to say zero in other languages, I would. No drawback at all, my friend. All right. KRE has retreated into the wave. Question is, hey there, Bottle Hawk, does that matter? Within the context of a trend, it does. And you might recall back in the day when we had that gorgeous trend in KRE, these pullbacks to the wave, these pullbacks to propulsion were pretty much the gift that kept on giving, right? Here we go. Every one of these until, well, it wasn't. Now, what is the difference in structure? It's the difference between a green bullish momentum, green bullish trend, and what we have now, which is a non-trending environment. So this is where we pull a nice little Fibo here. We just pull that from minor low to minor high, and 382 to 50% looks pretty darn good. Very similar to what I was talking about in gold. So the wave in a non-trending environment is not as important. The pullbacks, the retracements within CHOP, the Fibo pullbacks are far more important. But great observation. Remember, it's on a trending environment. How do we know if it's a trending or not in trending environment? Use the layout that I've shared with you all. We have a free layout that we share here at Simpler. 4 different indicators, actually 5 with my preferential settings, 2 sets of trade flags. It's a great foundation. It's the base upon which you can build your frankly, your market analysis via the charts. It works very well with our premium tools, and it'll give you an idea of what the market behavior is like. That is what it's designed to do, because market behavior structure dictates strategy. So everything really should first and foremost be, what's the structure of the market? What's the mood of the market? And then strategy goes from there. And then the indicators that work best for that strategy are the next tier down. So if we have a food pyramid, that's how it works, right? Structure, strategy, secret squiggles, right? Those are your 3 S's. Structure, strategy, and secret squiggles. All right. And just like that, gang, gosh, that 20 minutes flew by. I'll see you all tomorrow. Same time, same station here at Charts and Coffee. And also, if this week for members, I've got the weekly watch list. Check that out. I've got some really in-depth notes for you all there, which I'll be adding to likely throughout today for sure. And then I'm going to see you all right now in the options room for the open. All right. As always, gang, be good to each other. I'll see you tomorrow.